This is the Construction Leading Edge podcast from ConstructionLeadingEdge.com and ConstructionBusinessAccelerator.com. My name is Todd DeWalt. It's my job to help you maximize revenue and eliminate chaos. Got a great interview with a construction financial expert today. Her name is Jessica Krause. She grew up in a family-owned sheet metal business. She is a CPA. She has been a controller for a construction company. And now she provides outsourced CFO services for construction companies. And here's what you're going to get out of this interview. You're going to learn about some of the root causes of your cash flow problems. You'll find out what a CFO actually does. What does a controller do? What are some of the things that they do for a construction business? Some of the questions that she would ask you if you want to grow your business. She'll talk about some tips for small businesses, and you'll also learn some rules of thumb about how much you should pay yourself, as well as the starting point if you want to start planning for retirement. Great interview. You're going to get a lot of really actionable tips out of this, but I do have a couple of resources that I want to share with you before we get into that interview. If you own or run a construction company, I want you to imagine this. What would it be like if you could schedule for revenue and you could drive your business instead of chasing it? What if you could design your operation so that you could stay out of cash flow crunch mode, you could make a healthy profit, pay yourself a healthy salary, and eliminate chaos in the process? What if you could have a steady source of leads so you could build the right kind of backlog without spending money on advertising? Well, I've got two programs I want to get in your hands for free. They're the Revenue Maximizer and the Contractor Sales Accelerator. They're worth about $4,000 combined, but right now you can get them both for free, plus a whole lot more when you claim your free 10-day trial of the Construction Business Accelerator program. You're going to get the Revenue Maximizer, the Contractor Sales Accelerator, plus a whole lot more: the Mindset Upgrade, the Leadership Masterclass, the Project Execution Formula, all of my best stuff. So if you like the podcast and you want to go to the next level and go deeper, get more practical, tactical, strategic stuff to put to work to help you eliminate chaos and maximize revenue, go get your 10-day free trial and get all of that stuff for free at ConstructionBusinessAccelerator.com. Again, ConstructionBusinessAccelerator.com. Grab your free 10-day trial of the Construction Business Accelerator. If you own a construction business and you want to increase revenue 25 to 50%, if you want to eradicate the chaos in your business and streamline it and turn it into a well-oiled, profitable machine, then this is for you. I want to invite you to take advantage of a special offer for a free business breakthrough coaching session where you and I are going to get on the phone and we'll work together to help you create a crystal clear vision for what ultimate success looks like for your business and the lifestyle that you'd like for your business to provide for you and your family. We're also going to uncover some of the hidden challenges that may be holding you back or even sabotaging the growth of your business, and as a result, keeping you working too many hours and not getting the results you want. And when we're done, you're going to walk away from this session renewed, re-energized, and focused, maybe even inspired to get after it and turn your business into a highly profitable, revenue-generating, well-oiled machine. So if you want to take advantage of this limited time offer for a totally free business breakthrough coaching session, then all you got to do is go to ConstructionLeadingEdge.com/call. That's ConstructionLeadingEdge.com/CALL. And one more thing for you: if you own a construction business or you're planning on starting a construction company in the near future, I've got a free video series I want to get in your hands. Have you ever wondered, how do the big successful contractors do it? How do they grow consistently? Why don't they have cash flow issues? What are they doing that you're not? Well, I've got a free video series called The Secret Strategies of Successful Contractors that I want to get in your hands. And here's what you're going to uncover in this free video series. One hidden cost that causes a lot of contractors to bleed cash and they don't even know it. There's this new way of thinking that will help you drive revenue, deliver projects on time, and ultimately grow your business and take it to the next level. You'll learn about some of the things that big contractors do to succeed that very few small to medium-sized businesses do. And lastly, you're going to learn why some of the biggest problems you're facing may not be problems at all. So if you want to get this free video series, all you have to do is go to ConstructionLeadingEdge.com/owner, OWNER. Click the big red button that says, yes, send me the information, and you will learn some of the secret strategies of successful contractors. Now, without further ado, here is my interview with Jessica Krause. All right, Jessica, thanks so much for being on the podcast. Let's jump into it with this question. What are some of the biggest mistakes that you are seeing contractors making these days?
So I think the biggest mistake I see contractors make is not understanding their data. They collect a ton of it. They collect a ton of data, but they don't really know how to manage it or how to read it. So to give you a few examples, so estimating work, putting a price tag on it without really knowing the true cost. So they're collecting the data, how much they're paying for labor, how much they're paying their subs, how much they're paying for materials, but maybe they're not allocating it properly to their jobs. Some of it might end up in a shop material bucket, or their payroll burden might not be accounted for correctly, might not be allocating their workers' comp and other insurance to their jobs. Or they're allocating it correctly to a job, but then costs are getting moved around. So they're looked like they're staying within their budget, but maybe they didn't. Maybe their project managers want their jobs to look good because of a bonus incentive. So they move the cost to another bucket per se. And then you never have accurate data to ensure you're truly estimating your work and knowing the true cost. And some aren't even doing that much. Some aren't even job costing at all. They think they have good margins. They believe they're including everything in their estimate, but then they run into a cash flow situation, and I have no idea why, because they aren't job costing properly and aren't reviewing their jobs at closeout. I've also seen some companies that break their costs down into phases or cost codes, but kind of along the same lines as before, they never go back and review or analyze the data. They aren't watching the labor compared to the budget to see where the inefficiencies and bottlenecks might occur based on exactly what phase of the project or what exactly they're working on at that time. So I think having real-time, accurate data and knowing how to use it to improve the bottom line is game-changing for a successful business in this industry.
Let's talk about overhead. One of the common challenges is how do you keep up with the indirect costs, the costs that are not directly attributed to a job? So let's say a company has 3 or 4 different projects going on at one time, but they have shared overhead. They have office, maybe utilities, there's insurance, maybe one project manager, the owner. How can somebody in that situation go about, how should they be thinking about their overhead? How do they allocate those costs? What do you recommend on how to deal with overhead costs in that kind of a situation where it's not cut and dry as far as how it gets allocated to a project?
Yeah, so I think you can do it a few different ways, but one that I've seen many times is maybe based on a labor hour. So they take their overhead and maybe allocate a percentage based on their labor for that job. Or they might do it by billings for that job, might allocate their overhead across the board in that way. Project managers, some still have them keep timesheets, even though they may be salaried, just to be able to allocate their time to different jobs. So I think that's setting up kind of a plan to begin with on how you're going to allocate it and then staying consistent.
Got it. So in other words, if you had 1,000 total labor hours, for example, and one project had 400 of those labor hours, then 40% of your overhead costs for that month would get allocated to that project. Is that what you're saying?
Correct. Yeah.
Okay. And why is it important to distribute overhead and indirect costs to projects in your experience?
Well, when you're estimating the next project, you need to make sure that you are you're making enough money to cover those overhead costs plus some. So you obviously want to be not just looking at the job cost. And so you might say, oh, well, we have cost plus 10%. Well, what about your overhead that's included? Your overhead might be 10%. Now you're not making nothing. You're not making anything on that job. And you want to be able to make even more, go above that. So having those overhead costs allocated to the job is going to be really important to make sure that you're bringing in the profit.
Got it. Absolutely. One of the most common problems for contractors, really of all sizes, is cash flow.
Yes.
What are some of the common root causes of cash flow problems that you run into with your clients, or either that, or what are some strategies that you've seen to be successful when addressing cash flow? You can pick either the root cause or the strategies that you've seen to be successful.
So there could be a lot of different things. So job costing, like we just talked about, is going to be huge. If they're not allocating the correct job cost to the job, if they're not accounting for that overhead, and they're not going to be making enough money and seeing that cash coming in. So that's one area where the cash flow is going to become an issue because there isn't any extra coming in. There's no profit. They're just losing on every job. Then the next piece is you might have either a little bit of greediness, or maybe they haven't set up their personal situation very well. And so they're just constantly taking money out of the business instead of allowing their equity to build up and giving back to the business to be able to grow. A lot of the subcontractors, if they're in a paid when paid situation and contract, they're getting to the bottom of the line and they are financing a lot of that project and a lot of the labor that's going through there. And that, if they don't plan for that accurately, if they keep taking cash out of the business, they're not going to be able to handle those situations very well. And that's going to put them in a huge cash bind. And also billing. Under billings is going to be huge as well. So if they aren't managing their billings, knowing what bills are coming through that they need to pay and take care of, and incorporating those and their billings to the GC or the owner, then they're going to get way behind. And for many, it takes 60, 90 more or more days to get paid. And so that's really delaying their payment further and further out. And that kind of ties into timely financial reporting as well, and how they catch those under billings. If they aren't getting their financial reports done for 45, 60 days after month end, and they're not catching those under billings until that time, they're going to keep continuously underbill. And it's going to take, several months after the project's complete before they can get that cash coming back in the door. So I think staying on top of their billings and trying as much as possible, although it can be very difficult to be in that overbilled situation, would be helpful.
Yeah, absolutely. I want to go back and dig into this a little bit because cash flow is such a big problem. A little different question. What are some of the worst things someone can do who is in what I call cash flow crunch? Like, for example, would you recommend someone go into debt to try to get out of cash flow crunch? If, factor receivables, some sort of financing option, Is that a good idea? Is that a bad idea? Are there some mistakes, some glaring mistakes that people should avoid if they're struggling with their cash flow?
I think in this business, the cash is so up and down. For the most part, you see that a lot. And so I think having a good financing option, having an open line of credit with some availability for when you get into those lulls in that position is okay. Where you're going to get into a problem is if you don't fix the things that we talked about first. So if you're still pulling money out of the business continuously as an owner, and you're not building up that equity and that cash in the bank, if you're not fixing the underbilling situation, that's when financing and putting money on a line of credit or whatever that may be, that's not going to help you at all, because you're just going to dig yourself a deeper and deeper hole. So I think temporarily, if you need to pull on a line of credit, if you need to get some financing situations, to get a private lender, some equity, do that. But also make sure that you're aware of what's causing the problem, what's going on in your business, what's causing it, how can you fix it and get that fixed.
Yeah, that's great advice. That's very similar to what I tell my clients, is that your cash flow problems are really not the problem. They're just a symptom of several potentially several underlying problems, like,
right,
as you mentioned, underbilling. If you're not getting your invoices in a timely manner, then the profit could be there, but it doesn't do you any good because it's not coming in for 45, 60, 90 days. If you're underbilling, what I think a lot of it goes back to, in my experience, is people don't really have a plan. A lot of contractors don't know how much cash they need to bring in every month. They're operating, as I call, left to right, just sort of starting, doing the best they can with what they have, and then waiting until the end of the month or the end of the year, and sort of asking somebody like you, asking their tax professional or their CFO, how did we do, Jessica? Like, fingers crossed, sort of cringing, hoping for the best. When it's
roll the dice.
Yeah, it's like, how did we do? And there's nothing you can do about it. And that's no way to grow a business. And what works much better is to work, as I call, right to left. And I did a whole podcast, for you guys who are listening, I did a whole podcast on right to left. It's somewhere back around episode 65 of the podcast, where you decide what do you need to do? How much cash do you need to bring in every month to make sure you're covering your job costs, your labor, your overhead, paying yourself, and putting some money away in cash reserves, having some profit, and then use your revenue targets to drive your business forward, and then schedule your work for revenue. It took me a long time to figure this out, but when the light finally went on, I was like, oh my gosh, this is how you stay out of cash flow crunch mode. And we'll get off the cash flow crunch situation in just a minute. But if you're listening and you want some information on cash flow, I've got a lot of resources there. Actually, you can go to constructionleadingedge.com/cashflow, I think, and I'll put some cash flow strategies in your hands that you can use to get to those underlying problems. Some of the underlying problems that are presenting as cash flow problems will surprise you. So I've got a bunch of free stuff there that I'll get in your hands. So let's move on. Let's talk about what you actually do, Jessica. I know you specialize in helping contractors with their finances, but what's the name of your company and what exactly do you do?
Yeah, New Life Accounting, and we are a CPA firm focused solely on the construction industry and mainly providing outsourced CFO services and tax planning. So I grew up in the industry. My dad and his brothers had a sheet metal and HVAC business. Went on to public accounting. I had a goal that I thought I was going to be the CFO for J.E. Dunn Construction. and stayed in public accounting and worked with many construction businesses in either accounting, tax, or audit services when I was approached by a local commercial electrical contractor who asked if I'd be interested in their controller CFO role. So I did that for 5 years, gained an extensive amount of knowledge in the industry, and kept thinking about all the other businesses out there that I could help if I went out on my own. So here we are, started New Life Accounting, and just feel like the construction industry deals with so many complexities that other industries don't have. We've talked about some with cash flow, percent complete, paid when paid subcontractors, labor burden, unions, a bunch of different things that are issues that maybe other accountants aren't necessarily familiar with. So, and that's a little bit about why I chose the construction industry and what we're focusing on. So as a CFO for the construction business, just for a minute, let's ignore the word outsourced. I think that kind of throws people off a little bit. So if you just look at what a CFO is, a chief financial officer, it's the senior executive responsible for managing the financial actions of a company. So for the construction industry specifically, the CFO is going to be responsible for possibly managing an accounting team. That could include someone that handles accounts receivable, accounts payable, payroll, billings, possibly a project accountant. The CFO will track cash flows, make sure you don't get into a cash flow situation, prepare financial forecasts based on your backlogs and trends in the industry, what your goals are, develop and report on key performance indicators that are relevant to your business and your visions. Make sure job costing is accurate, manage WIP reporting, ensure that the financial reports are accurate and completed timely, and then work with outside parties such as surety, auditors, banking, insurance providers. So that's what a CFO is going to do for your business. The only difference is we're outsourced. We're not on staff, but we provide you all of those same things and at really a fraction of the cost. So, and you have a full-time CFO on staff, even if you're in the bottom 10%, you're looking at paying them around $178,000 a year, and that doesn't include bonuses or any type of benefits. So we can provide those same services with the same amount of detail for a lot less.
Got it. I see this so often. There's this giant gap for a lot of contractors. They have a bookkeeper. They have someone maybe in-house or maybe they've outsourced to a local bookkeeper to handle all their data entry. And then they have a tax prep person. They have a CPA who prepares their taxes. But there's no one looking at the data saying, this is what this means. And here's the strategy based on this information. And one of the biggest things, I think, is here's what you need to do to manage your tax liability. You know, a CPA is great to put your tax returns together, but by that point, it's too late to do anything strategically. Right. So what are some of the common misconceptions about what an outsourced CFO does for a contractor?
I don't think there are really many misconceptions about an outsourced CFO per se. I don't think they understand it. I don't know that they understand what it means necessarily, kind of like what you said. But when they hear that I'm a CPA, I think the term CPA is what throws people, and they automatically think of tax preparation, like you mentioned, our day-to-day accounting functions, such as paying bills, receiving checks, payroll, or they think of their auditing firm. They have an outside CPA come in and do their financial audit or financial review. And while we do provide a couple of those services, the tax prep and outsourced accounting, we aren't an auditing firm, but since we do provide two of those, that's great. But there's so much more. And like you said, having that person, that strategic financial partner that can take the information, analyze it, and provide a better resource and tool for you to use and grow your business. Like, that's really what we focus on the most.
Got it. Speaking of growing a business, if a business owner were to come to you and say, Jessica, I want to grow my business, what are the first couple of questions that you would ask them?
My first question would be why. It sounds simple, but I think really understanding the reason that you want to do something. Growing your business is going to be challenging, and knowing why you want to do it and the real reason you want to grow it is going to help you stay on track, keep going. And for a lot of the guys that are smaller contractors, I would ask if they're ready to step out of the field, because I think when you're really wanting to grow your business and take it off, you aren't going to be the one that's in the field doing the work. You need to be out running your business. So are you ready to do that? Are you ready to run a business, or are you wanting to stay in the field? And then what kind of capital do you have available to you? Do you have capital in your business sitting there? Have you been the business owner that takes it all out? Do you have a line of credit available? Do we need to look at extending that line of credit? And going back to the cash flow topic again, there's going to be a situation in every business that, you're going to have a bad job. There's going to be a bad job that comes up. That's when you might get into a little bit of cash flow situation. That shouldn't be the norm. That shouldn't be ongoing. That should be the exception. And you just want to make sure that you have the resources available to handle that and handle a turn in the market and pull out of it ahead. So those would be some of the questions that I would ask.
Yeah, I really like the question, are you ready to get out of the field? Because I talk to a lot of people who are in that situation, and they think they want to get out of the field. They think they want to run a business. But that is a big jump to make from an operational standpoint, from a financial standpoint, and then from a mindset standpoint. Because to go from the guy or gal in the truck wearing the tools to being in the office, or maybe on the job a little bit, and trusting and delegating to other people and having systems and processes in place, it can be done, but it doesn't happen accidentally, and it's very difficult in my experience. What's a good rule of thumb for cash reserves? Or do you have any other rules of thumb that you would share with small construction businesses, whether it's you should have X number of months of payroll in cash reserves, you should expect to pay X amount in taxes, any sort of rules of thumb that you can share with folks to get started being somewhat strategic with their business?
So I think it probably really depends on what level you're at.
Well, let's start with the small business, someone who is, say, they're doing $500,000 in revenue a year.
Okay, and based on what type of business you have set up, let's just say it's a flow-through type of entity, whether that be an S corp or a partnership. You're going to be paying yourself a reasonable wage and salary, and then you may be taking some draws out. But when you're looking at your bottom line, what those profit numbers are, you want to be probably putting away a good 30 to 40% for tax purposes. And that's going to vary depending on what your individual situation is. You may have some other things going on, but I think that's 30 to 40% of those profits is what you're going to be wanting to make sure that you have put away for tax purposes. As far as a reserve for expenses, I think 6 months is safe. And that's, again, going to depend on your backlog. If you're looking at your backlog consistently, you kind of know what's coming down the pipeline, know what kind of work that you have. So that may be a lot less, could be 90 days, just good idea. Just kind of a little bit, though, depends on what some other things look like in your business.
Sure. Yeah, I love the idea of having at least 60 days of cash reserves, because that gives you some flexibility to operate. Yeah, and I'm a big fan of a fat pipeline of backlog as well. And thanks for sharing. No, go ahead.
If I can add one more thing, I think part of that CFO services is looking at your cash and putting together some an investment plan and having that on board. So maybe you don't have 90 days or 180 days of cash available in your bank account, but maybe you have some easily accessible investment options that if you were to get into a situation, you could quickly pull from. And I think having a mix of that and cash available is a good tool for you.
Great. I want to talk about investments in just a minute, and thank you for sharing the percentage to be prepared for paying taxes. Here's a question I get quite a bit. Actually, I had a phone call yesterday. Business owner asking, how much should we pay ourselves, and how should we go about thinking what's the right amount to pay myself? Do you have any advice on that?
Yeah, so I put together for my clients a reasonable compensation report, and that looks at what's their role in the business, how large are they, where they're located at in the U.S., and it is formatted with IRS codes. So, because I'm going to make an assumption that this is an S corp, because that's where you get into a little bit of a situation with paying yourself. If you are a sole proprietorship on a Schedule C on your personal return, you're paying self-employment tax no matter what you pay yourself. So that doesn't really matter so much. So let's say you have an S corp. The IRS rules are that you pay yourself a reasonable salary. They don't give you a number. They don't tell you how much. They don't tell you the baseline. It's a reasonable salary. But based on some of their proceedings and things that they have put out, there is a report package that we use to determine what that reasonable compensation should look like. And then anything above that, you could take draws as you wish, as much of the profits as you would like. So there really is no number. There's no good number per se. It's supposed to be a reasonable compensation. So if you were to hire somebody else to do what you're doing, what would they get paid?
And is there a downside or some sort of repercussion if your salary is not reasonable, but you can actually afford it?
Yes. If you were to get audited, let's say that $500,000 company, and they're paying themselves $30,000 a year, and then taking draws of $150,000. The IRS could come in and say, "Wait a minute, you should be paying yourself about $120,000 a year. So now you're $90,000 short, and we're going to charge you self-employment tax on this, payroll taxes, and penalties and interest on top of that." So that would be what they can do if you're not paying yourself a reasonable salary.
So is the issue primarily people paying themselves too little and then taking draws that are too large? Is that
Yes.
Okay.
So they're avoiding the payroll taxes is what they're doing.
Got it.
By taking the draws.
You mentioned investments. A lot of people listening own a construction business. Maybe they're a sole proprietor, but they're certainly a small business owner. And one of the common issues I hear is they're not really sure how to set themselves up for retirement. What advice would you give them so that they can get started? I know that's a really big topic, but what are a couple of options? What should they be thinking about when it comes to retirement? Because if you're an employee, it's fairly simple. You just sign up for the 401k, but when you're self-employed, it's a different story. What advice, what are the first couple of steps you would tell people to take for that?
I honestly would go talk to a financial advisor. Most of them aren't going to charge you to just have a conversation and then put together a plan. And it might be something where you're just starting your business, so there's not a lot of income coming in. You're not really paying yourself a whole lot. So maybe it's not something you can do right now, but you can get this plan going. So when you get to X amount of income coming in, you can put this much aside. And you already have that in place. So there's no delay with it. But that would be my recommendation. If you have a spouse that's working and they are an employee, you could also increase their contribution to their retirement. And that might depend a little bit on your relationship, obviously, and what kind of state you're in. For marital purposes, it gets into a lot of individual situations, but that is another option that you could do as well.
Good advice. So let's talk about an example. Do you have any examples, maybe a case study of a contractor you've worked with and some of the things that they were doing wrong or weren't doing right, and you helped them, and what the result looked like?
Yeah. So the one that I think about is one that people might not think about when they decide to hire an outsourced CFO. So when I first started working with this company, everything was paper. And a lot of business owners that I talk to are still operating this way. So paper job files, notebooks and notebooks of reports, invoices, purchase orders, on, everything is paper. So while you can't come into a company and start changing everything at once, you'll have major pushback. We started with some subtle changes and started with the accounting department and transitioned them from an all paper division to paperless. And that might not seem like a big change, but some of the things that took place. So we automated the AP process. So what it used to look like is an invoice would come in the mail, or it would get emailed. If it got emailed, they printed it. Then they stamped it, filled out coded stuff, walked it back to the project manager's desk, probably sat there 3 to 5 business days, if not longer, or it got lost in a pile of papers. Then the AP clerk had to call the suppliers, hey, I lost the invoice, can you send me another one, and do the whole process over again. When the project manager finally approved it, gave it back to the AP clerk, she then had to code it into the accounting system, put it in a folder, wait for a check run. Check run came up, take it back out of the folder, print the check, send it to someone to sign. This is a long, as you can tell, process. So by the time we were done with automation, the invoice got immediately uploaded into the accounting system, so there was no data entry from the AP clerk to enter that transaction. And as some of you may know, if you have a long material listing and you have a T&M account that you need to show all the breakout of materials, you need to enter all those line by line by line items, which is very time consuming. So we had the system put into place where you could upload the acknowledgement into the accounting system, enter the invoice information. The workflow would send it over to the project manager. Now the project manager is going to be on a job site, and they get a break. They can look at the information on their tablet, their iPad, their iPhone, whatever it may be, review, see the image of the invoice, approve the invoice. The workflow goes back to the AP clerk. They submit it to be paid. The owner or whoever may approve, the CFO, whoever approves the payments, the ACH file gets sent to the bank, and it's paid. No checks to be signed, no checks to be printed, and it's all done quickly and automated. And that happened with the AP process, same with payroll, job budgets. They used to be exported into Excel, then from Excel printed, then someone would type them into the accounting system. And so this is something that you might not think about when hiring a CFO, but reviewing the processes of the company and how much time and effort and money that you can save by revamping the processes, adding some automation, adding some technology into that. In addition to that, we were reviewing overhead costs, and there were cell phones that were being paid for monthly and never used. There were air cards and a couple of iPads. Again, were being paid for. I think we ended up cutting the cost by like $20,000 by looking at those items that were just sitting and not being used and analyzing those costs. They also had great capital accounts and equity in the business. So we were able to talk to surety, the banks, and the GCs that they worked with. And instead of having an audit done on their business, we were able to have a review done. And I don't remember the exact pricing, but I think it ended up saving them around $15,000 to go from an audit to a review. And then negotiating some terms for their line of credit when they needed that. So that's a few instances with that one client of how we cut costs and change some of their processes to make things run smoother for them.
Yeah. Thanks for sharing that. That workflow that you mentioned with invoices, that sounds like the way things operated back in the 90s.
Yeah.
Back when I started in the industry, we had a fax machine. There wasn't even email, and there's a lot of people who are still operating the same way. And what people don't realize is that there's a cost for every check you write. There's a cost, and you can. Right. I remember hearing a statistic at one company. They said that it costs us like $12 to $15 to cut a check, because of all the labor. And if you think about, if you have 10 people touching this thing for a minute at a time, that's pretty expensive. And simply streamlining that we're not suggesting laying people off, but what it's going to do is it's going to free up the resources that you have to do higher value work than simply passing invoices around. Great advice. And you might not lay somebody off, but you might be able to reevaluate your staff. You might be able to reevaluate where their benefits are and what they can provide to your business in other ways. Yeah. So. If someone, there's a lot of people listening to this who are doing their own bookkeeping. They're a business owner and they're doing their own bookkeeping. What would you say to them to help them think differently about that? Would you advise them to let go of the reins? Do you think it's okay for them to be doing that? What are your thoughts on business owners who are doing their own bookkeeping?
I have talked to many, and I know for some it's just a hard control thing to let go of. Others enjoy it. So I guess I would ask you, how much time are you spending? What could you be doing besides that? Does that mean you could be growing your business more? What is your value? Like, calculate your value and how much you are worth per hour, and then how much time you're spending doing your own books. And where could that money be spent elsewhere? Or where could that time be spent elsewhere? And how would that benefit you? If it's something you truly enjoy, maybe you used to be a CPA and you got into the construction business and to start your own business, so you enjoy doing your own books, then by all means, if that provides you happiness in your life, then you should hang on to it and keep doing it. For most of you, I would assume that you could take that time and do something more meaningful for your family or for your business. And I would look at the cost of potentially handing that off to somebody else and if it would benefit you.
Yeah, I would. If you're listening to this and wondering, is this the highest and best use of my time, I would encourage you to go listen to episode 79 of my podcast, and I'll tell you, you'll learn about 10 things you could be doing as a business owner that are worth at least $1,000 an hour. And I'll tell you about a conversation I had with one of my coaching clients a few months ago. He was doing his own bookkeeping, probably spending 4 to 6 hours a week, keying in invoices, doing it all in-house. And they were a significant size organization, doing several $1 million a year. And I said, man, you need to be doing something else. You need to be out selling. You need to get out from behind QuickBooks and do something else. And so he talked to a local bookkeeper and got all excited about it, and then came back and he was a little discouraged about the cost. And it was like $80 to $100 an hour. And he thought, well, I just can't afford it. And there's a lot of business owners, in my opinion, are trying to reduce the wrong costs.
Right.
Trying to reduce that cost, trying to reduce bookkeeping cost. And in my opinion, the cost they need to be reducing is the opportunity cost. And there's a huge opportunity cost. Actually, everything you do has an opportunity cost, because opportunity cost is simply the difference between the maximum return on the time you're spending and what you're actually getting out of the time you're spending. So if you could pay somebody $100 an hour to do your bookkeeping, which sounds crazy, but it's really affordable when you think about the fact that you could be doing things that will make you $1,000 an hour. So if you're doing your own bookkeeping, you could be getting hit with a $900 per hour opportunity cost. So if you want to focus on reducing a cost as a business owner, focus on reducing your opportunity cost. And yeah, go listen to episode 79, and you'll hear about 10 things that are worth at least $1,000 an hour that you can work on.
And not just that, but I have one client that I'm working with currently that has misfiled payroll taxes for a year. And if they would have had somebody that they were working with, I haven't even finished calculating yet the amount of penalties and interest that's going to be that they're going to be hit with. So there's other costs too. Plus there's other missed opportunity costs of what if you hired somebody and they could save you in other areas of your business, things that you haven't thought about yet. So I think there's a lot of things to look at when you're analyzing that decision.
Yeah, and I think going back to what are some misconceptions or the things people believe to be wrong, I think in a lot of cases people look at having somebody, whether it's a CFO or a COO or a CEO, having some high-level help. They see that as an expense, and they look at it as a straight cost. And the reality is, with an organization of any size, it's probably an investment. If you do it right, and you hire the right person, it's going to be an investment that pays for itself pretty quickly. And so Think of it as an investment. Look at it. What's the ROI? It's not just a straight cost. But that's giving up the reins to the bookkeeping that's a tough one, because there's some comfort in what I found is that it's a form of avoidance and procrastination in some cases, because it's like this sanctified procrastination where people tell themselves, well, I'm just so busy doing my own books that I don't have time to go out and build my business. And it sanctifies, it's comfortable for them, so they hide behind their machine and they key in invoices because it's comfortable, and it's not really helping them do their business or grow their business, and it's helping them to avoid the strategic but uncomfortable things that they probably know they should be doing. So we're running up on time. Let me ask you one more question, and then I'll give you the opportunity to share how people can get in touch with you. But do you have any recommendations on resources for people who are listening, whether it's business, leadership, financial advice, could be books, podcasts, magazines, anything like that that you like to follow that you could share with folks?
I currently, right now, I've been listening and following a lot of Darren Hardy. He also has a Darren Daily, so he sends out videos. It's a free resource. Sends out a video to your email every morning, and they range like a minute to 8 minutes long. Mostly they're like around 3 minutes. So it's just a good start to motivate you, keep you focused on track to running your business each day. And one of my passions is also technology in the field. And JB Knowledge Company has a Contact Crew podcast. They also focus in the construction industry and a lot of IT and technology-based resources there. So I think that's really important when talking about our industry as well.
Yeah. James Benham was he was on my podcast actually a couple of years ago, and then Rob McKinney was one of the early podcast guests here. So yeah, check out the Contact Crew, and I'll have to check out Darren Hardy as well. So thanks for those recommendations. If people want to get in touch with you and either connect on social media, set up a time for a phone call, where should they go? What's the best place to go to get in touch with you?
Yeah, my website is newlifekc.com, and that is life with a Y. newlifekc.com, or they can email me at jessicak@newlifekc.
Jessica, thanks so much for being on the podcast. This was very helpful.
Thank you.
There you go. Hope you enjoyed that interview with Jessica. Be sure to reach out to her. You can find her website at newlifekc.com. That's newlifekc.com. And don't forget, you can grab your free trial of the Construction Business Accelerator right now. Get the Revenue Maximizer, the Contractor Sales Accelerator, the Mindset Upgrade, and about $9,000 worth of stuff total. And you can get that for free for 10 days. All you have to do is go to constructionbusinessaccelerator.com. Grab your free trial there, and you will be off to the races. And if you want to schedule a free call with me, talk about your business, some of the roadblocks, clarifying the vision and direction, and get some help moving forward so the next year is different and better than the last year, you can schedule your free call over at constructionleadingedge.com/call. And hey, if you got any questions, you can email me, todd@constructionleadingedge.com, or you can call or text me. Believe it or not, I'm going to give you my phone number. You can call or text me at 859-667-2015. Let me know how I can help you. And lastly, I appreciate the ratings and the reviews, and I'll read one of the recent reviews that came in. This is from @It'sChappy. They said, Todd knows how to ask questions and how to create an environment where his guests are comfortable talking. It's a great skill to have in a podcast that makes the show different than any other construction podcast and gives the listener incredible insights. I appreciate that. And if you could take a minute to leave a rating and or a review on the podcast player of your choice, I would appreciate it. It gets the word out there to the rest of the interwebs. And if you need some help with that, on iTunes, I've got a step-by-step guide you can check out at constructionleadingedge.com/iTunes review. That is it for this episode. Thanks so much for listening, and I'll catch you next time.